What's up, YouTube? Welcome back to another episode of KJ the Investor. This is yours truly, KJ. And without further ado, let's go ahead and hop into the portfolio. As you can see right now, the investing account is making a comeback. We're not all the way back to where we left from, all-time highs or whatnot, but we are in the positive right now. Right now, we're at $58,718. And, it's Sunday. The market just opened back up at 8 o'clock Eastern time. It's not like truly open, but it's in the aftermarket. So the aftermarket's open back up at 8 o'clock. So people are able, to go in here and make trades. They're able to go in here, check balances, able to go in here, do cover calls if they want to, do some options and things like that. So let's go ahead and look into it. Buying power sitting at $22.20. I have been buying in the market. Right here, we have our crypto holdings. Bitcoin still at 83,000. Doge is still at 17 cents. Ethereum, $1,900. And Avalanche, $18.55. Let's go ahead and go down. Now, for the meat and potatoes of the video, not going to hold you long tonight, but we got stocks and the ETFs. You guys already know my main strategy is long-term, buying whole big boy blue chips. So I'm going to go ahead and cover some of my positions and some of the main positions that I feel like is going to help me reach the financial freedom threshold the fastest. The first ETF I would like to look at is SPLG. SPLG is my S&P 500 ETF. Right now, it's sitting at an amazing $65.90. Now, I say it's an amazing price because it really is. If you remember, SPLG was on the upwards of $70 a share. So right now you're getting $4.10, almost earlier it was a $5 discount on SPLG per share. I have 237.17 shares of SPLG. Market value is $15,629.97. Average cost $64.35. Total return right now is a positive $367.42 or 2.41%. Now, guys, I have seen this, not stock, but it contains over 500 companies, 500 stocks in this one fund. So that's my broad-based index fund, SPLG. I know a lot of people like to get the total stock market, VT. VTI is another one that people like to invest in. They like to invest in total market, and there's nothing wrong with that. I don't see nothing wrong with that. But as long as you're investing in something, something like the total market or something like the S&P 500, in my opinion, are two of the best. Those are two of the best investments that you can make. I'm not telling you that you have to do it, but I'm just telling you, in my opinion, those are two investments you really can't go wrong with because you're so diversified. So many investors and YouTube content creators keep talking about being diversified and being balanced and well balanced and things like that. I mean, when you buy these two funds right here, guys, I don't think there's no more diversification that you can get. Like, that's as diversified as it can get. So now let's talk about this. I got 237 shares of SPLG. To me, guys, I'm on the road to 300 shares. So I'm trying to hurry up and get there fast. Unfortunately, I wasn't able to take advantage of the market this week, even though we really had some really low lows. Just like last week. Now, last week and the week before and the week before that, I've been able to crush it. I've been investing. You guys know my strategy, dollar cost averaging. I've been taking money that I got, I get from the job, and also what I got on reserve on the sidelines. I take it. When I see a good dip in the market, I'll go and buy. And that's what I've been doing. It kind of irked my nerve a little bit this particular week that I didn't get a chance to do that. But hey, this is real life and this is a real channel, and I'm here to share. Transparent moments with you. Excuse me, I had to clear my throat. But yeah, I wasn't able to take as much of an advantage of the market as I was the last 3 or 4 weeks, like I normally do. But this particular week I've been, had to buy a tire for my car. Also, you guys, just real life things, like a mortgage I had to pay this week. And also, what else we did? Me and my wife just had to take care of some things around the house, grocery shopping, things like that, man. So nothing bad, what I'm saying? Just normal stuff that kind of comes up and prevents you from being able to put as much into the market as you would like. But that's normal. Everybody goes through that particular situation. But anyway, not crying over spilled milk. We're going to keep pushing. We're going to keep going. But if I had one investment that I wanted to focus on while the dips were there, guys, the S&P 500 was my choice. I wanted to go ahead and buy up as much of this thing as I could. As you've seen, I have. Now, remember, at the end of 2024, just last year, I told you guys after I had reached 200 shares, I said, you know what? I done made it to 200 shares at the end of December. I said I was just going to take it easy and focus on some other investments, which I did. But also, this particular ETF, the total market and the S&P 500, they dipped so low and the price was so attractive, guys. I couldn't just not buy the dip. I'm not timing the market. We know that time in the market beats time in the market. But when you got all-time lows like how this thing dipped, you just can't help but take advantage. And that's exactly what I did. Because if you did not buy when the markets were like crashing, then it's so much money you left on the table, because that was the time to buy. When the markets are low, I told you guys so much. When it's in the red, we create wealth. But when it's in the green, that's when we collect wealth. Now, you've seen this account, this same fund, give me over $1,000 return. Right now, I'm a little above $300, remember. Go right here, total return, $367.42. Now, this is super low. It's, to me, in my opinion, it's still on sale. It's still a discount. It's still a buy. Anything over under the $70 mark is still on sale for this particular ETF. And that's what I've been focusing in on when I see it. So, like I said, more opportunities in the future are coming up really, really soon. This week, as a matter of fact, tomorrow's Monday. The market's getting ready to open up. And I'm going to be ready. I'm going to be in position. I'm going to be prepared. And I'm going to be ready to execute with my money that I got on the sidelines or money that's in the bank. I'm getting ready to deploy into the market for more economical outturn. Also, guys, in the Fidelity account, still sitting on a good little chunk over there. It continues to grow. I know some people keep asking me about a high yield savings account. In the Fidelity account, guys, I'm also investing over there, and that portfolio is actually, with your high yield savings, you get about a 3 to 5 to 6% return on your investments, which is good. But right now, in the Fidelity account that I have, I'm growing anywhere between 8 and 20% yearly on my returns. So I'm not really, concerned right now with the high yield savings account. I'm all in the market. I'm all in. So when this thing crashed and went down, I did not pull out any kind of money. I kept monies deployed. As a matter of fact, I deployed more money into the market. When the markets were crashing, when 47 was coming out with all these tariff talks, and when he was trying to do what he had to do to crash the markets, and it helped me get put in positions, because why would I sell when I haven't made it to wealth yet? Why would I sell if I haven't made it to my $1 million, my $2 million goal? Like, why would I sell? And so I didn't. I just used the crash of the markets as a collateral or a situation to put myself in a better situation by buying more of my favorite ETLs down the stretch. And y'all, SPLG was definitely one of them, one of the main ones. It's 26.64% of my portfolio. So it's a little bit over a quarter worth of percentage of my portfolio. My entire portfolio, SPLG, this one ETF, is over 25% of the portfolio. So that's pretty impressive to me. Next up, we got FTEC, it's Fidelity Information Technology Index ETF. Right now, it's 167.47. To me, it's still on sale. Anything over the 170 mark for this ETF is still on sale. I got 15.57 shares FTEC, market value $2,608.44. Average cost $173.31. And right now, total return, I'm down 91 bucks in this position. But I won't be down for long as the market continues to rebound, as more and more good news continues to come out. The Federal Reserve is going to eventually drop rates, and man, this thing is going to soar. LTC has over 315 companies in the fund, and so all big boy technology companies, high movers, fast growth. So I'm excited. I use this particular ETF for my growth fund. It's a very exciting fund because it goes up fast, comes down fast, but it goes up even faster. So I don't feel like you can go wrong with a ETF that, diversifies your risk of in these growth stocks. Because like I said, 1 minute you can be up. Because if I would have put all my money, my whole nest egg into NVIDIA, and these last, 2 months, I would have been crying. Because NVIDIA's been more so down than up the whole year. But the reason is markets have been tensions in the markets. It's been so much uncertainty in the markets. It's been investor pullbacks in the market. Like I said before, tariff talks, things like that. 47 doing what he's doing to negotiate strategies and things like that. So, hey, cool for them. Great for me. I'm going to continue investing in it. I'm going to continue dollar cost averaging in. I feel like dollar cost averaging beats the average investor. It beats trying to time the market. So I'm going to just continue to dollar cost average into this particular ETF as well. This ETF, FTEC, also paired with SPLG, gives me a somewhat of a safety net type of set it and forget it type of investment style strategy. I don't really stress it. I don't worry about it at all because the market is known for going up. That's the whole reason why the stock market exists, for it to grow and go up. So to me, this is a high growth index fund. SPLG is my foundational, and you already know I got SCHD as the defensive and the dividend fund. So it kind of holds its own when the market kind of crashed. SCHD was still up. It didn't go down as much as everything else because it's a defensive type of fund. So I continue holding on to SCHD as well. Here it is, my Schwab U.S. Dividend Equity ETF, $27.58. All right, now I got 219.86 shares of SCHD on the road to 300 shares. Market value is $6,063.82. Average cost $26.35. Still up. Total return $270.33, or positive 4.67% return. SCHD has stood the test of time. I feel like, and recently we just got some big announcements about reconstruction at SCHD. Every year we get that announcement that SCHD is going to reevaluate the performance of the different companies inside of the fund. And there's certain loopholes and certain stipulations that companies have to meet on a continuous basis to stay a part of this particular ETF. SCHD don't play. They want funds in there that's going to pay dividends, and they're going to pay dividends consistently. They want companies in there that's going to be, profitable to the shareholders. And so if you own SCHD like I do, I got 219 shares of it on the road to 300. If you are a shareholder of SCHD, trust and believe that the fund managers are working continuously to add companies in, take companies out. We just kind of got to hold tight, sit back, see what they do, and continue collecting profits at the end of the day, man. That's what it's all about. Let's continue making this easy money, reinvesting it back into the portfolio, buying whole, long-term, big boy blue chip ETFs and stocks. And that's exactly what I'm choosing to do with this index fund right here. So between SPLG, my foundational fund, FTEC, excuse me, my high growth fund, and SCHD, my defensive or high dividend fund, y'all, I felt pretty good going into the market recession or the market crash, whatever it was that we just experienced for the last month and a half, 2 months. It's been cool. Yeah, the investing account was above the 64,000 at its all-time high back in the beginning of January. Coming out of December, we were doing really, really good. And then we changed administration. 47 got in there. He started doing all this terror talking, wreaking havoc in the markets like he normally do. And so that's when everything started going red, and it was a lot of red Kool-Aid in the pool. So you know how that go. Also, the traditional IRA sitting at $39,884 now and 14 cents. Same thing over here, buying power $476.53. Nvidia, it took a spike upwards. We up to $120.95. I still got over 204 shares in Nvidia combined. So over here, I got 60.91 shares of SPLG over here. Another 14 shares of FTEC over here. And as you can see, I got some other stocks like Palantir, Meta, Costco, AMD, and, MicroStrategy, things like that. Help give me some growth, help the fund grow bigger, faster, all that good stuff. Right now, the portfolio is at $98,571 and 34 cents. That's what it is for right now. So it's all good, man. We're going to continue buying whole. Once this thing is back up to the levels that it's supposed to be and recovered, you'll see a six-figure account once again. So don't worry about that. I don't worry about it. I don't stress it. Now that account, man, we went as far as to lose about 40% of our account holdings because of the tariffs and what 47 was doing in the media. So I didn't stress it then. I'm definitely not stressing it now. So it's like I said, it's made some returns, it's made some gain backs. It's not gained back fully all the way, but I believe leading into the summer, I believe these tariff things will be resolved here shortly. And once the market gets a clear direction to some good news, I believe that we'll be on our way. Fidelity account, we got another $11,461 over there, and it continues to grow. So we're going to continue to let that thing do what it does. So yeah, we're on the road to 150K, 200,000, and then eventually 500,000, getting to 500,000, man. And we're gonna do it relatively quickly. I got a good feeling about it. Also, I'm going to continue to buy and hold long term into the market. Going to continue to be optimistic because I believe in the market. I believe in what it was created to do, which was to go up. And that's the best way to create some passive income for yourself. Put your money into something while you sleep. And like I said, y'all, some of these positions are fresh for me. Some of these positions I've been in since last February, last January, just last year. So we haven't reached the full 2-year mark yet, or 3-year, 4-year, 5-year. So we got time to let compound interest work on our behalf. We got time to let things grow. Right now we getting some earnings coming in. So some of our favorite companies like Microsoft, Nvidia, Coca-Cola, they're paying out dividends as we speak. So I know another company you guys find exciting in my portfolio, I'll go ahead and go over it, is Walmart. Right now, Walmart's at $85.49. If you remember at the earnings, Walmart went over $102, $103 a share. So right now, I feel like $85 a share for Walmart is a bargain. I got 112 shares, 112.52 shares. Market value is $9,619.41. I really got over $10,000 within Walmart. Once it goes back to normal levels, my average cost, $58.46. I'm still up total return, $3,041.44, or a 46.24% return. Monster returns, monster gains. So I'm going to continue to buy and hold Walmart long term because I believe in the company. I believe in what they're doing. And right now, they're one of the companies that's doing it the best when they do what they do and how they do. So, yeah, I'm going to continue to buy that. I'm going to continue to hold on to my IBIT ETF, which is Bitcoin ETF. It's just some things I'm looking at into the market right now. But like I said, to get through what we just got through, my strategy was my 3 ETFs. I got the SPLG, FTEC, and SCHD. All 3 of them have different functions, and they serve a different purpose with different companies in each. But With that being said, I was able to survive the crash and, bounce back within the market. So we're going to continue to see what this this bounce back does. Also, I'm going to continue to buy and hold long term in all three funds and with my portfolio. If you got any kind of comments, questions, concerns, make sure you drop it down below. And until next time, this is KJ the Investor. Make sure you share the video, like and subscribe if you enjoy this kind of content. Next time, KJ the Investor, over and out. Peace.